Welcome, ladies and gentlemen, to the Precious Metal Summit Europe, and it's day 2, and we are now talking to Aurcana Corporation, and Kevin Drover, the CEO, is here with us. Hey, good morning, Kevin. How are you?
Good morning. Good. I'm great. How are you?
Perfect. All fine here. Thank you very much. Still in the marathon. I think you are my 27th interview, but we are doing great. No problem at all. Yeah. So you are bringing your project into production. So what were some highlights here last year? This year, of course.
Well, I guess the big highlight for this year is that we've now pretty much gotten our production financing facility in place. That's a big hurdle we've been trying to get past. So we've now gotten credit approval from the Courier for that $28 million financing, and we expect to close that right around the end of the month, November of this year, and that will pretty much fund us, and along with the money that we currently have, that'll pretty much fund us to production.
Okay, wow, that's super. And I thought you're already doing underground development. This is in progress.
Yes, we are. We're progressing quite well. We've got about 73 people currently working underground. We're doing our pre-production infrastructure development. We have to put in raises basically to access the ore. It's above our main haulage level. So we have to go up about 850 feet vertically. We have to put in elevators to be able to get men and materials, up and down. So there's a hoist that goes in, ventilation, water, air, power, and things like that. We also have to have openings, and these are about 850 feet as well, for ore passes to get the ore from the top down and get the waste down as well. So there's 3 raises that we are currently doing. They are in various stages of completion right now. In addition to that, we've let contracts for rehabilitation of our emergency escapeway. That's a $3.5 million contract. That's all in progress right now. Also for our surface buildings that we need to get foundations and buildings erected before the winter really sets in. All of that is in the process of being done. The contracts have been let and the contractors are on site working. Winter tailings construction is nearing completion. Wow. And our passive water treatment system is probably at 90% complete. So we've been doing a lot of work and getting ourselves prepared for production.
Fantastic. So that looks all really coming to an end, and finally you can start production. So 2021 will definitely the production start year, right?
Yes, that's our target, is to be putting ore through the mill early in the second quarter of 2021. So we're targeting something like May, in that vicinity, a couple of months later at positive cash flow. So that's what we're working toward right now, is getting that done. We still have to make a formal production decision. We're waiting until we see the money in the bank from our debt facility first, but we anticipate that happening sometime very soon.
Okay, super. Then let's come to your production profile. I think for the first 5 years, it's 3.1 million ounces silver equivalent production per year, of course. Yeah, at AIC of $8. This is very nice, I would say.
It's very low cost. One of the lowest cost mines, I think, around. Yeah, our production profile is 3.1 for the first 5 years. This is a very high-grade mine, as people well know. We're at 37 ounces per ton on a proven and probable basis. We're looking at actually bringing some of the grade forward in the early years. So we'll be producing probably in the neighborhood of 3.5 million ounces in the first couple of years. The feasibility study is done at 270 tons a day, and that's the basis for that 3.1 million ounces. But the mill is designed for 500 tons a day. So what we want to do first is, as per the feasibility study, we're going to start up at 270 tons a day. We want to establish our production profile, our metallurgy, our productivities, our costs. Once we get those under control, which we think will take probably somewhere 2-3 months, we intend to start pushing the tonnage up from that 270 up to closer to 400. So we're targeting not that 3.1 million ounces. We're targeting closer to that 4.5 to 5 million. Going into that second year, we want to be higher than that. But before we do that, we don't want to get ahead of ourselves. We want to make sure we do a good job with getting our designed numbers in place, get a good solid foundation. Then we can start taking the tonnage higher.
Yeah, that makes absolutely sense to me, because when things are running stable, it's much easier to enlarge them, of course, right?
Exactly.
and it flushes the treasury with cash. That's also good. I saw also in your presentation that where if you would like to have expansion plans, this is angle to the Monongahela claims. What's up with them?
Yeah, well, our focus right now, virtually all of our resources, there's a little bit on some of the other veins, but I would say 75% of our reserves and resources is on the Virginius vein. We've been able to pick up a number of claims on the Virginius vein, and we now own 18,000 feet of this vein. All of our known reserves are on only 4,000 feet of the Virginius vein. So we now have, to the north and to the south, ample opportunity to drift on our vein and to expand that 7 years of mine life up to 10, 20, 30, hopefully. We're not going to bring all of those reserves in, or try and do it all at one time. It's very expensive because you can't drill it from surface. You have to develop on the vein and get yourself to a position underground where you can drill. So you have to spend a lot of money. So we're going to try and keep that 7 to 10 year mine life in front of us, but we're not going to try and drill off 20 years or 15 years reserves. I think most people that invest in mining understand the narrow vein nature of this. And an economical use of capital, right, is really what we're talking about here. So we want to keep that around 10 years of mine life in front of us.
Yeah, well, this makes really sense to me also, absolutely. Interesting for me is that you still have 95 million warrants outstanding I mean, they come from former financings for sure, but at what strike price, how long is the maturity? And let's put it that way. When you are in production, I'm pretty sure you will have a re-rating in the valuation of the company, because the risk is going off and you are starting to make cash. Yeah. So probably they will be exercised then sooner or later. And how much money might flow into the company, and for what would you use it?
Well, right now we've got 227 million market float right now for shares. We got 95 million warrants. Vast majority of those are struck at 37.5 cents, so they're well in the money. We're trading at 85 to 90 cents kind of thing Canadian right now, so we're well in the money with those warrants. And some of them have been being exercised a little bit, kind of dribs and drabs, as they say, coming in kind of thing. So I assume that they will get exercised over the course of the next 2.5 years, and I think there's probably at least 2 years left on these warrants. So people have time, and I think they'll probably wait for to see the value from us in the market as we get ourselves into production and whatnot. But that's money that's going to come into the treasury of the company. We do want to put the Shafter project back into production at some point in the future. Right now, our focus is on getting revenue in the Revenue-Virginius mine into production. We don't want to get distracted with doing anything else. But we do have the Shafter mine in Texas that is fully permitted, has a 1,500 ton a day mill. It needs some drilling, and it needs a feasibility study. So we'll get to that, and we're going to need some capital for that, $25 million US probably, from what we understand right now. But we still need to complete a feasibility study to get a clearer picture. So we can see some of those uses. We could see some of the uses for exploration expansion for the Revenue-Virginius mine. So I think we'll have ample good uses for those funds as they come in.
I'm pretty sure on that too. No, that's fantastic. I mean, this also can finance expansion of production, anything else. I mean, we talk about easily $35 million when everything is exercised. So that's quite a lot of money.
Yes, it is. It's a lot of money for sure. That's 35 million Canadian. So depending on where the U.S. Canadian dollar exchange rate is, kind of thing. So yeah, I mean, we're in a good place right now. For sure.
Super. Perfect. Kevin, thank you very much. It was a great update, and we look forward to see you then in Q2 in production.
Excellent. Thank you.
Thank you very much. Yeah, ladies and gentlemen, that was Kevin Drover, the CEO of Aurcana Corporation for Precious Metals Summit Europe. And you heard it, the company is on high speed to start production in the second quarter of next year. The financing, is so far done. They're only waiting for the money in the bank, and then they go full throttle, direct straight pass into it. 3.1 million ounces silver equivalent will be for the first 5 years, the annual production at $8 AISC. This is outstanding. So the company will be a nice cash cow here in the future at $24 silver. This is fantastic. And I would suggest you check it out. Thanks for watching us, and bye-bye from Switzerland.